Good morning. We will start the morning call. US markets were up more than 1% yesterday. Asian markets are up between half to 1%. World markets rose after US data yesterday showed consumer price index rose by 0.3% in April on month-on-month basis, below an expected 0.4% gain, raising hopes that Federal Reserve can cut interest rates twice this year. On a year-on-year basis, if we see core CPI fell to an annualized level of 3.6% in April compared to 3.8% in March. If you look back, the Jan, Feb, and March months, the 3 months continuously showed that inflation reading was coming above expectation, which was worrying the markets. So now markets is somewhat relieved after seeing the April report. Fed funds futures shows 52 basis points of cuts this year, with one in September now fully priced in. Also, weak US retail sales data for April pushed hopes that inflation will cool in coming months as well. I will now invite the technical team to take the call forward.
Thank you, Jihan. Good morning, all of you. This is Swati. Yesterday, we have seen that the Nifty was facing a strong resistance of 20 DMA and maintain a closing below the same levels. But looking towards the Asian markets, I believe that the Nifty is likely to open with a gap of opening. And as of now, Nifty will get open at around 22,270 levels. 22,300 will act as an immediate resistance level provided by its 50 days moving average. If Nifty surpasses that level, then this pullback rally is likely to be extended towards 22,360, 22,440 levels on the high side. Whereas on the downside, as of now, the immediate support lies at 22,140. Any move below that level will again attract the selling pressures and which might take a Nifty towards 22,070 levels on the downside. So today it will be a deciding levels whether the Nifty will carry its pullback rally or not will depend upon the today's closing. Coming towards the Bank Nifty, 48,140 is the immediate resistance level. Any move above the same will extend this positive rally towards 48,340, 48,500 levels, whereas the support is placed at around 47,700, 47,500 levels. Coming towards the Fin Nifty, 21,200, 21,140 are the support level we need to keep eye on it, whereas the resistance is placed at around 21,370, 21,450 levels. That's it from my end. I request derivative team to take call forward.
Thank you. Good morning, Aaron. So on the derivatives front, as you are seeing that in yesterday's session, also Nifty is not managing to hold on the upside levels till the time Nifty is coming near 22,300 to 400 level. After that, we are seeing that the supply has been witnessed in yesterday's session. Also, as per the OI position from 22,200 to 500 strike, Colorado position got added up heavily, while from 22,200 to 22,000 mark, put at a position is starting to getting added on. So same view will be witnessed in today's session also. Range one momentum will be witnessed till the time Nifty is not giving closing about 22,500 level. Till that point of time, we might witness the range one scenario of 500 to 700 points in coming days of trading session, where India Wix again increased in yesterday's session and being closed at 20.2. Witnessing, we can expect India Wix is likely to come between the range of 22 to 28 level in coming days of trading session before the election results. So the volatility is likely to increase in coming days of trading session, while FIs are continuously into the selling zone until the time we expect the next 1 to 2 week more FI selling will be witnessed. So overall, on the index specific front, we should remain little cautious. But on the stock specific front, we are seeing that the many stocks are giving some breakout levels. So also, so you whenever whomsoever is creating long position, the strict stop loss need to be maintained because the market fluctuations is very high. While on the stock specific front, Metropolis, BPCL, Siemens, and BSOF looks positive. While on the negative front, Granules and PI Industry look negative in today's trading session. So that's it from the front. Thank you.
Yeah. On the results front, Power Finance Corporation result is marginally above expectation. Loan book growth came down from a high of 19% in quarter two to 14% in March quarter. Management had guided for growth to be in the range of 13 to 15% going forward, so it is in line with that expectation. Where the result beat the expectation is that provision came negative at 337 crores against expectation of 110 crores of provisions, which resulted in profit coming higher. Asset quality continued to improve with net NPA declining 5 basis points to 85 basis points total. We remain positive on Power Finance Corporation in the long term. LIC Housing Finance result is marginally above expectation due to decline in NPA. Net NPA came at 1.6% against 2.2% in December quarter. Disbursement growth also spiked up at 14% year on year and witnessed decent acceleration after declining since 5 consecutive quarters. So we think market will be happy seeing this revival in disbursements. However, loan growth remains sluggish at 4% year on year, with individual home loan growing at 7% year on year. But it will take some time, 2-3 quarters at least, for the higher disbursement growth to translate into higher loan growth. Stock is cheap at one-time price to book, and there is some scope for re-rating if the disbursement growth sustains going forward as well. So expect good action in LIC Housing Finance from here on. Dixon Technologies result is below expectations. Revenue grew 52% year on year, although came 7% below estimates. EBITDA came 10% below estimates, with margins remaining flat sequentially at 3.9%. Profit grew 18% year on year. However, it was 7% below expectation. We are neutral in near term, but positive in long term on Dixon. If at all stock has a decent correction, then one can look at accumulating on declines. Thank you.
Good morning. Yesterday there was a con call of Colgate Palmolive Limited. We had seen the result was above expectations, where the revenue grew by 10% on a YY basis. The management highlighted that the domestic sales growth was at 10.7% on a YY basis, and gross margin improved by 240 basis points on a YY basis to 69.3%. And similarly, EBITDA margin increased by 230 basis points on a YY basis at 35.7%, which was mainly on account of higher operating costs and staff costs, which were partially offset by lower other operating costs. The management also highlighted positive signs of recovery in rural markets. It has a focus on growing the core business with the relaunch of Colgate Strong Teeth, Colgate Active Salt, and revamp of Colgate Max Fresh toothpaste. And pricing is expected to fall with a moderation in inflation, but volume and premiumization is going to play a key role, and margins are likely to be around current levels. The stock is trading at a PE of 49.5 times to FY26 EPS, and we are neutral on this stock at this valuation. In addition to this, Patanjali Foods Limited hosted the con call. If we look at the segment-wise commentary, edible oil and Vanaspati segment, it is mainly focusing on the oil palm plantations, where the share of young plantation, which is into 0 to 3 year, has increased from 19% to 33% during the year, and it has established 14 new nurseries. It has focused more on the food and FMCG segment, where the segment has reported 2,705 crore of revenue with EBITDA margin at 9.6%. During the quarter, the segment has contributed 33% of revenue. And in foods, it has two categories, staples and the premium category. Staples is a lower margin category of 7 to 8%, and premium category is having the higher margins with the range of 23% to 25%. In the biscuits and confectionery segment, it has improved its margins from 9.3% in FY23 to 14% in FY24, and it has observed superior product mix where it has achieved the milestone of rupees 1000 crore of revenue for its Doodh biscuits, and others are at rupees 600 crore of revenue. It expects 15 to 16% revenue growth in this segment for FY25. Also, it is focusing on expanding its distribution, where it plans to expand 12,000 to 15,000 retail outlets every year. In addition to this, it has also announced a potential acquisition with Patanjali Ayurved. So this is not an announcement, but this is an evaluation which is in early stage. And with this acquisition, it may foray into home and personal care segment. Also, the management ensured positive direction even after issues faced by Patanjali Ayurved when it comes to Supreme Court, and expects no impact on the business front. One can expect update on this front from the management side in the next few weeks. We are neutral on the stock, where this stock is currently trading at a PE of 65 times to TTM EPS. Clean Science and Technology Limited posted the results in line with expectations. Revenue grew by 5% on a YY basis and 17% on a QOQ basis. Overall, it has seen sequential growth, volume growth of 23% with 7% price decline. It has observed volume recovery across the segments. EBITDA margin reported at 41.5%. The management has guided for 3,000 tons per annum of sales for its HALS capacity, which was commercialized in FY24. The full ramp up of this capacity is expected in FY27. Also, the company has achieved 50% domestic market share for HALS 770, which is mainly used for UV stabilization in a variety of polymers, where it aims for 65% share in the near term. The management overall guided for 15% EBITDA margin for newly commissioned HALS capacity in the initial years, and plans to gradually ramp up to 25%, which is normally lower than company level margin, which was at 42% in FY24. The company has process innovation backed business model, and we are positive on the stock, where stock is currently trading at a PE of 32 times to FY26 EPS. Berger Paints India Limited results were below expectations. Revenue grew by 3.2% on a YY basis, where volume growth reported at 13.9% on a YY basis. Quarter 4 FY24 witnessed moderation in value growth, which was mainly an impact of price reduction and sale of high volume and low volume products. There was no price reduction observed in the luxury category. EBITDA margin reported at 13.9% versus the expectation of 15.5%. The management expects mid-single digit value growth during the FY25. Decorative business is expected to maintain double-digit volume growth for quarter 1 and FY25 with slightly lower value growth. Also, ad spends were increased by 40% in FY24, and it may relatively get normalized in FY25. The company guides for 15 to 17% EBITDA margin going ahead, and the stock is currently trading at 44 times to FY25 EPS. And we believe at this valuation, there is a limited upside, and thus any correction in the price may give a better entry point for an investment. Thank you.
Hello all. Yesterday we attended Surya Roshni phone call, HIPPO phone call. The results were okay. And so as far as the consolidated performance goes, the company reported a slight dip in the revenue by 2% and EBITDA by 5% in FY24. on account of significant headwinds. EBITDA margins for Q4 FY24 and FY24 stood at 8.3% and 7.51% respectively. And the company has now become a zero debt company. It reduced its debt by rupees 400 crore in FY24 and now has a cash surplus of around rupees 65 crores. So there are two segments in the company. So first of all, in the lighting and consumer durables segment, the performance was like this. So in spite of significant price erosion in the consumer lighting business, the company recorded an annual revenue growth of 2% and stands at around rupees 1572 crores in FY24. Then there was a strong volume growth coupled with better product mix in favor of higher margin volume products and cost savings on back of PLI-led backward integration, and that resulted in strong operating profitability. EBITDA margins for Q4 FY24 stood at 10.66% as against 9.84% for the same quarter last year. Professional lighting business has witnessed high teen digit growth in Q4 and more than 20% in FY24, driven by infra as well as industrial projects. In FY24, the fan business recorded mid-teens growth, while the appliances segment grew by robust 20%. In the second segment, the steel pipe and strip segment, the performance was like this. In Q4 FY24, the steel pipes segment recorded its highest ever quarterly volumes of 2.36 lakh tons and witnessed a volume growth of 4% in Q4 FY24 and growth of 6% in FY24, in spite of the B2B business witnessing a temporary slowdown on account of general elections. Despite significant reduction in steel prices in Q4 FY24, the company witnessed only a slight dip in its overall sales revenue. Exports registered a volume growth of 12% in FY24. The EBITDA for ton for the quarter stood at rupees 5,877 as compared to 9,868 the same quarter last year. This was on account of muted value-added product sales and loss in inventory. The company has an in-hand order book of around rupees 800 crores as on 31st March 2024 for the oil and gas sector, water sector, and the export business. So overall, going forward, the company management says the challenges are temporary. The company expects positive environment for both of its verticals going forward. As far as the guidance goes, the company has guided 15 to 18% volume growth in the steel pipe segment in FY25 as well as FY26. Rupees 6,000 to 6,200 EBITDA per ton for the first quarter of FY25. Going forward, company expects steel prices to rise or remain stable. Demand is going to remain robust because of infra push by the government. Going forward, expansion will be majorly in value-added products. In steel segment, new capacity additions have been planned, and the capacity additions will come in Maharashtra, will lead to capacity build-up from 1.2 existing 1.2 million ton to 2 million ton. The capex over 2 years is around rupees 500 crores. The new capacity expected EBITDA per ton will be in the range of rupees 7,000 to 8,000, and that will lead to the overall EBITDA per ton being in the range of rupees 6,500 to 7,000. There are some new product categories to be launched in lighting segment in Q2 of FY25. Capex in the lighting division over the next 3 years is gonna be in the range of rupees 100 crores, and there is no update on the demerger of business verticals. The stock is currently trading at PE of 12.7 times FY25 estimated EPS. So overall, the outlook remains long-term positive from a long-term perspective on this company. Thank you.
Commodities team can take over.
Yeah, thank you very much, Jian. Good morning, everyone. Gold prices are expected to trade in the positive territory once it is closing above the 72,800 mark. So buying on dips around 72,900, 850 is recommended with a stop loss of 72,650. On upside, it can test 73,300 to 500. Silver also, we are expecting prices to rise and test 87,700, 88,000. So buying on dips around 86,500 is recommended with a stop loss of 85,800. And in metals, copper prices have opened gapped up opening. So buying around 895, 94 is recommended, and on upside it can test 902, 905. Zinc also, we are expecting a pullback till 264. Then we can expect some profit taking. Prices can test 261, 260 on the downside. Crude oil prices have managed to close above the 65 support, 6500 support area. So buying at 65.50 is recommended with a stop loss of 64.70. On upside, prices are resisting 6600 to 66.50. So around that level, one can book profits. In natural gas, we are expecting prices to test 208, 210 levels. So buying around 198, 197 is recommended with a stop loss of 190. That's it from us. Thank you very much.